up, let's put the spotlight on precious metals because they continue to shine bright in the global market. Silver, in fact, has surged 3.5% yesterday. It is up another 1.5–2% in trade today to trade near $83 per ounce mark. What does this mean and whether the outperformance will continue going forward? To discuss this, we are now joined by Mohammad Imran, research analyst at Mirae Asset Share Khan, now joining us. Mr. Imran, afternoon. Great touching base with you again. First up, your thoughts on the precious metals basket. Two factors continue to move. One, of course, is Iran. Because of the protests that are happening over there, safe haven demand continues to surge. And second, questions being raised about independence of the Federal Reserve. How do you see these factors weighing on the precious metals market in the near term?
So absolutely, as you mentioned, that geopolitical concerns have just surged up in 2026, and these are the core factors which will continue to drive gold and silver prices higher. And what has happened over a period of 1 week, because we have seen that geopolitical issues of Venezuela, now that Trump is warning that he will want to take Greenland as well. So all these geopolitical factors has raised the concerns that going forward we could see China Taiwan issues as well as Russia Ukraine issues is already going in on. So all these factors shows that we could see $5,000 per ounce target in gold prices achieving nearly in the first half of 2026. Meanwhile, on the silver front, we see that physical, like there's no there's lack of physical delivery available for silver. That's why we are seeing that uh, silver prices in China are trading at $7 to $8 premium with that of LBMA and COMEX. And over a period of 15 or 1 month, we have seen that that LBMA inventories have surged up, but they are likely they are not diverting towards Shanghai inventories. So that's why uh, uh, silver prices will continue to remain on a higher side in China.
Right.
And the other factor that could see silver prices higher is that even the lease rate in London, which were at 8% in the previous week, although it has
Right.
declined to 3.5%, but still they remain at a historical high, because historically we have seen that lease rate in London remains around 0.5%. So it is still is 7 times higher than the historical mean.
Right, so that's as far as gold and silver is concerned. But before we let you go, one question on oil as well. What kind of impact do you expect on account of protests in Iran and its impact on the oil market? How big is Iran's oil as compared to the global oil dynamics?
So you see that Iran currently accounts for roughly 3% of the global crude oil exports and or production, accounting like they currently produces around roughly above 3 million barrel per day. And any disruption, like if we see that 1 million barrel of disruption could have an impact of $5 on crude oil prices. So any disruption at this because of Iran could see prices moving higher by $8 to $10 in short period of time. Although this may not be sustainable, but still this could have a higher impact on the crude oil prices on a higher side. So we see that the WTI crude oil prices could move towards a resistance of $65 if
Right.
this protest escalates.
Right. So that's the impact on the oil market. Mr. Imran, unfortunately, we are short of time, but thank you so much for taking your time out and joining us here today.
Thank
With
you.
that, it's
Thank
a
you.
wrap on this edition of the show. Thanks so much for tuning in.